Started off here with Crown Chart application in accordance with Bitcoin, of course, and I want to once again reference the global open interest chart, of which we've been slowly watching this march its way down. And of course, the same interpretation and same logic does apply as we've been looking at for the past year or so now. Anytime that we've seen it get over 13 billion, we typically see it reset with at minimum a 20% price correction and at maximum about 50 to 60% price correction, of which we can pull up this first example over here from March, of course, before Bitcoin went from about 60,000 to 50,000 bucks relatively fast. Then, of course, the iteration after that would be your April highs of the past year before going from $65,000 all-time high all the way down here with a full-on reset down to 5.5 billion actually with a B, that is at 30,000. Then of course getting marched back on up, of which that did go in direct accordance with what we did see at the $53,000 all-time, or not all-time high, but prior high in September before going down to $40,000 in a GIF. And then of course the $69,000 all-time high was met with our new all-time high on open interest as well before coming down to about 40,000 bucks and washing out a good amount of those positions. But again, the nuanced interpretation of this is that over the past month, especially in December, we saw this level once again get marched back on up to about 13.5 billion, that is, and the same sort of relationship it has been implied. We see another correction down, in this case coming all the way down even just below $40,000, not necessarily on a closing basis. So all of the long-term analysis is still very much valid as long as that condition is met, which we're going to harp a little bit on today, but I won't go fully into it. If you want the more long-term analysis, definitely check out the long-term analysis video that I posted over this weekend in the long-term analysis playlist, as that's going to be exactly for you. Good old 45 minutes of just Crown beating your ears up, basically. Anyways, with that in mind, we do expect the natural base of the open interest to naturally rise over time on a, of course, maturing asset. But again, when we're talking about an asset that really hasn't seen that much time between even the last high and where we're at right now, just a couple months actually, I wouldn't expect that number to be all that different. So we are getting very close to that region. We got all the way just into the shallow 11s actually. And you can see on the hourly here, on the hourly data feed, that it is starting to curl back up again. And you do see that people are starting to put on leverage positions once again. So the real question is, did we see a good enough reset on this in order to be blindly bullish off these regions? No, I would say no in this case. However, this can come about multiple ways when we see this unravel. And what I suspect is going to happen is going to play into the analysis here. And this is going to be the biggest, baddest Boolah hoping that I can give to you right now. But before we get into that, I want to go through a few more of the market data tab pieces and kind of round out this case. The exchange's net flows, we saw a humongous outflow, the biggest outflow that we've seen basically since what was this, September? Yeah, September. Or was this November? Is this, oh, fuck man, I don't know if this is okay, this is definitely American timing. So 9 is September is what I'm trying to verify. Look, I live in Finland and they switch around the dates on you and it's super fucking confusing. It's day first, then month, then year. In America, it's month first, day second, and then year, which actually doesn't make that much sense, which is just, you know, because America, right? And I'm gonna take another sippy sip of this coffee while you mull over these thoughts. But again, major outflows that we haven't seen basically since the likes of actually 9/11, funnily enough, or not funnily enough, but that date right there. Ah, beautiful. All right, still got a little bit left in the tank as well. Awesome. Anyways, that would obviously be more on the Boolah-ish side, as you do see more and more coins come off exchanges. And yes, this data is very much verified. It's not just internal transfers. We actually go through a very, very rigorous process in order to fully confirm that that is like actual coins coming off exchanges, going into cold wallets. That is very, very important. Those are real coins coming off. And of course, we go in here to the indicator tab once again. I want to once again call out the Fear and Greed Index tab, just because we've been kind of following a bit of a narrative with this alongside price action, which of course price action matters most, but I do want to once again kind of harp on this. In the Fear and Greed Index, we are still within the extreme fearful zone. Yes, I do understand that it's probably popped up a little bit from yesterday to today, because this is a running data feed from the last closure essentially, but ultimately I am looking for something relatively similar to what we saw over the summer right here. And actually, now that I recognize it, I do need to bring this up. Fuck man, I should have really prepared for this before this stream, but I was taking my own little dumpola. So just 1 second here while I do find this. I'm sure it's going to be on Twitter if I just look hard enough. I know it's here somewhere. I'm seeing pictures of naked girls now on Twitter. That's good. That's really good. Well, let's get the pornog off. Let's turn off the stupid ass charts and watch and get real comfortable together, fellas. Who was this? Let me see if I can pull it up. Okay, this has to be it. There we go. Okay, I think I can find it now. But I want to kind of make a general narrative here as I pull things forward. Here we go. Okay, finally, I got it. All right, so I'll pull that in when it's relevant. But for right now, I want to make an analysis of like the whole underlying market dynamics plus of course, sentiment indicators, plus most importantly, price action as well. So first and foremost, or what we're focusing on right now, after the open interest, was the fear and greed index, of which we do see it doing something very similar to what we saw over the summer lows when Bitcoin spent about 2 to 2.5 months within the very, very fearful zone right here. You can almost see a fractal relationship between what happened over here and what happened over here, essentially with that spike up just to the shy side of the neutral zone on that failed rally to your range highs on the higher term timeframes, and then slunk back on down to your range lows yet again, even testing a little bit lower than that right here. And then of course, another month's passed, and this one actually did put in the bear trap of death. So if we see something like that, and then within like the next month or so, you see that short start to let go of their positions, thus curtailing the open interest, forcing it down, that would be a really, 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 really good sign. When our correction's over, when our bear market's over, not that this is necessarily a bear market, but certainly a correction or a downside move, it's when the last seller has sold, obviously. Just like when bull market's over, that's when the last buyer has bought. It's actually very, very simplistic, but it does get the job done. So let's go into the price action charts right here. And I want to once again draw out this relationship. I'm going to make sure that you can actually see all of it because it is important, obviously. And I'm talking about this price action right here, right? That we saw over the summer while Bitcoin did put in a major macro base at $30,000. We have a very similar price action going on right here as well in that case. And if you can watch the range highs right here, I'm talking about this area right here, you'll notice that that spike up comes exactly to the 55, that green moving average right there, just like you see right here, just up to the 55 right there. You see the first low right here, boom, okay, that's our first low right there. It slinks back on over after getting rejected at your range highs. It makes an ever so slightly wick lower low, but no closing lower lows. That's very, very important, very fucking important. And you see the same thing over here as well. I'm talking about this area right here versus this area right here. Let me actually pull it out again. I realize you can't see that well. And then over the next month, we get a few anemic rallies and just a grind down from the yellow 21 all the way down here, at which point there is, of course, your bear trap, as Bitcoin did pop back above, busting on through about 32,000 bucks. That's when we called a major bear trap right there and got very, very bullish on this channel. And I'd be doing the same thing over here if that were to happen as well. But for right now, what do we kind of expect if this relationship is going to hold through over the next, few weeks here, maybe even another month and a half? Well, we'd be expecting another rally back up somewhere around the 21 in this case, which by the way is still well fucking below the white 200 simple in this case, which is not a good sign, by the way, long term. And then slink back on over, retest the lows again, maybe a few weeks, maybe a month, something like that. And then no closing lower lows right there, below the first initial wick. Very, very key important ingredient again. And if that happens and we see something like this where it pops back above that range highs, that would probably be good. And that just looks like one squiggly line drawing. I also want to plot this in here as well. This is what I was alluding to earlier, and I want to talk about this adjusted dormancy flow. This is going to be the new meme within this market, obviously, but memes are powerful, right? And I definitely have my own bone to pick with a lot of the the on-chain analysts. Not necessarily that I think they're bad people. They're certainly not bad people. I think all of them are actually very, very good people. I have a high amount of respect for them. I just don't see that these things work out all that much. And they always seem to be bullish, which is just, I don't know, man, it can't always be fucking bullish, right? Anyways, looking at this right here, it would kind of play into the analysis that we have another one of these potential situations going on where we see basically anytime that we've gotten within this green zone on the chart, it has been basically a macro low. The last time we saw it get into this chart ever so slightly was actually over the summer at 30,000. Of course, the time before that was the good old flu dump of March 2020. The time before that was your macro cycle lows at 3,100 in December 2018. Then, of course, your 2015 macro cycle lows, and then of course the Genesis rally, back in 2012. Found its lows within there as well. And you see that is just dipping its toesy woesies into this region for the first time in a very long time. Again, do I put that much weight on on-chain metrics? No, I don't actually. But what I do put a lot of weight on is price action. And if it's present on price action and also present, there I am, hello. If it's present on price action, present on the underlying market dynamics, present on, more tangible things, specifically open interest and flow data as well, of which we did see some major outflows on the exchange's net flows, as we alluded to earlier. then there might be some merit to it. At least it seems to me like it would have a little bit of, it would have a little bit of confluence. And overall, if this relationship does hold through and Bitcoin does find its lows over here, so we're making a lot of assumptions right now, we need to talk about what would that actually look like. What would confirm this? We already spoke about what would invalidate it. Obviously, a closing lower low than the 4th of December wick low right here would easily invalidate it, which we don't have just yet. But if we were to get something, like this, what would validate this as your next cycle low, or I wouldn't say cycle low, but your next major low before, I guess, never going below there ever again? Well, in this case, we need to go, of course, into... Well, we need to kind of zero in on this data. Let me actually go to a fresh chart here. I'm actually working off of a completely different chart here. This is the one that I actually used to test my strategies, in fact. Anyways, more info to come on that later, I guess. So what would essentially confirm this? Well, the obvious answer is above your daily range highs from the prior $52,000 rejection right here. Of course, that is, I do think that would be relevant to be a little bit more aggressive before that actually happens. But just like we saw over the summer, that first move up that brings you back above on an open and closing basis, the yellow 21 and by extension the 9 exponential moving average right there, that's going to be your next sort of generally good signal, and that's going to be marching its way down probably somewhere around upper $43,000 territory. So the earliest that I could reasonably see this, I wouldn't say reasonably see this happening, but the earliest that I'd really be getting excited about this for the interim would be with any sort of a daily closure back above the breakdown levels that we saw from late December, essentially, right around here at about $46,000. As long as Bitcoin's below there, it's still a pressure down, it's still a downtrend. Everything else points down. It's usually, not too profitable to be trading against the daily trend in this case for like long-term holds, obviously. So that'd be the first major thing, of course. And then the next sort of confirming factor would be back above the 55, which will be marching its way down, currently trading at about $49,000. And then the full-on confirmation, no more questions asked, talk about fucking boolah moon parties and shit like that again, would be back above $52,000 all-time highs right there, or not all-time highs, but prior range highs right there. Of course, if we go into the charts over here, which I need to make sure I'm looking at the right one. Yeah, here we go. I won't talk about the hash ribbons indicator today, although I do want to give a big shout out to Mr. Crypto Zombie for giving me a shout out for that, man. Thank you for that, brother. Actually, I miss him a lot. I changed my number and I forgot to like notify people that I changed my number, and I feel like he might think that like I'm ignoring him or something. Hopefully not, man. I love that guy. Anyways, what was I going to speak about right here? Yeah, let's talk about daily and higher term time frame momentum oscillators, of which we do see daily Stokes finally, or I wouldn't say finally, but officially crossing to the upside for the first time, basically since that failed December rally. And of course, this is not just on CME, it's also going to be on spot price action as well, both coming in from the same areas. And by the way, this is not just on the daily, it's also on the 2-day as well. The 2-day is going to be closing tonight at 7 p.m. Eastern time. Any sort of a cross and confirmation above today, 42,500, will actually force that baby back up from the lowest levels that we saw basically since actually November, in fact. So all of this does at least align with a bit of a reprieve rally here, perhaps somewhere right around, our medium-term time frame range highs. That's completely fine. Doesn't really do much for the long term, obviously, but perhaps something to be aware of, obviously. And if we do go through the analysis of the daily stochastic momentum as well, I'll just briefly call this out. Anytime that we have gotten all the way down to this green horizontal line right here, which I'm actually going to adjust exactly to the current low and turn of this at 8.36, that has been, some pretty nice bounces at minimum, sometimes even your last macro cycle lows. In fact, by the way, the last time we saw this level hit was in fact on the July bear trap over the summer, of course, before going from 30,000 to, basically 69,000 bucks. Great number right there. The time before that was in fact right before, wait, actually no, it was not right before. Oh no, it did actually get right there. So to be fair, not guaranteed, not fucking guaranteed for anything really, although this was a decent rally before the inevitable did happen. The inevitable being a black swan event, which is inevitable, yes, but very low probability. 10%, 10.5% rally right there, to be fair. The time before that was coming off of, I don't believe this one actually does count. Oh no, it does count. Okay, so that actually was right. It was coming off this low before about a 65% rally. Again, doesn't look like much on log scale, but it certainly was. The two times before that were, of course, coming off of this major macro low right here. And again, a few more failed rallies, but decent rallies that we saw back over in 2018 as well. So again, it does align with, at minimum, a bit of an extension of this bounce. Thus far, I think we've seen how big of a move from bottom to top, about an 8% move. So, if it is going to fail, I guess we wouldn't be looking for too much higher, maybe somewhere around 10 to 15%, which would bring us around the medium-term time frame range highs. But here's a thing as we go into the short-term time frames, as I do want to make sure that I chart this out, because it is once again relevant, obviously. And over here on the 4-hour, nothing's really changed as far as this analysis goes, but basically 43,750 still the major area to be aware of. And as long as Bitcoin is below there, I mean, it is still, more or less a short-term, medium-term time frame range-bound market. Per speaking, do I think that we're going to bust on through to the upside and probably play out a move somewhere around 45 to 46,000 bucks? Probably yes. But again, if that fractal relationship holds true, we're probably not going to see any more busting action from there. Here's the thing, though, and another thing that I want to really harp on, that's going to be a major crux of my analysis for the next few weeks to come. Or I guess, as long as this one is essentially or just not invalidated, would be the weekly 55 right here. So anytime you see a breakdown that hangs right around a major movement average like this, specifically the 55, this also happens with like a 200 one as well. The big ones, the big major movement averages one, where you see an initial break and then it kind of hangs around there for another 1 or 2 and maybe even 3 periods. A lot of those times that is a potential trap setup. So a good example right here is actually the fucking summer one right here, right? It initially breaks below it, boom, trades below it the next week, and then pops back above. That was obviously strength, and well, I mean, the chart speaks for itself right there, obviously. Now, again, I won't go through the hash ribbons indicator signal on this one, but I can go out and say, hey, there has been an indicator, which I don't want to go through right now because it's going to be too damn long, that has suggested, or statistically speaking, has suggested or has shown that it has been calling the macro cycle, or not the macro, but the major lows before never closing daily totals below there. Again, not wicks below, but daily totals below, has fired off about a few months ago in, I think it was August, back on over here. That does suggest that $37,000 or $38,000 is going to be the low before not closing below there. Again, if that relationship holds true. Now, is that going to be 100% always going to be working? No, we saw it fail actually back in March 2020. Again, a black swan event doesn't mean that can't happen again, but ultimately I would be calling these things up and just kind of playing to the analysis. So over the weekend, I'll probably put all these puzzle pieces together so that they're nice and easy to align. But for right now, I think that this will suffice as my, apparently my internet's a little bit, this is weird, man. There's something weird going on with our internet. Like it's not right. Anyways, is there anything else I want to talk about here? Okay, we spoke about invalidation. Let's talk about invalidation targets. What happens if Bitcoin does close below the 4th of December wick lows? Well, I would be looking for an official move at minimum back down to our lows from this week, but more or less I would be looking for that official test somewhere between about $48,500 to $49,000 and then come back to it after that. If Bitcoin really starts to close below about the what was it, the 38, more like 37,500ish lows right here, at that point, we're very likely going for the full retrace of the summer and early Q4 2021 rally. But for right now, I do think that there's still a little bit of hopium. Please understand where all these things get validated and invalidated and the time frame that kind of comes in accordance with that. And again, on the greater scale, as far as this goes, it does still align with being one macro consolidation. And for what it's worth, or not for what it's worth, but I would go out here and say as well, the bearish divergence that we saw in the monthly RSI that we identified coming into, I think it was the closure of November to December, you could argue that move's already played out. This is first and foremost not a strong drive of divergence, so the 9 exponential moving average is going to be an obvious target for this. However, the 21 or just around the 21 is probably going to be good enough. And here's the thing: if Bitcoin does put in a low, basically anywhere at or above the 21, which by the way is just around that $37,000 to $38,000 target, or sorry, prior major low, then, well, we will have naturally hidden bullish divergence right here now, won't we? So with that in mind, that is a bit of a setup. And long term, if we go over into volatility indicators like the monthly BBWP, we are basically at similar volatility readings, not to last summer, but the summer prior to that, actually. So July 2020. And once the BBWP got back above the moving average on this, that is when we saw the crypto flip, to reference the Sims podcast yesterday. The flip! That's the fucking flip, man, coming out of this base right here. And by the way, all very low volatile reads on the monthly have been met with actual reversals to the upside after major macro consolidation. So I'm talking about this area right here, obviously before going from about 9,000 to 65,000. I'm talking about this area over here before going from 3,000 to 14,000. And then of course the 2015 lows right here before going from 200 to 20,000. So I do think that is relevant. And of course, I should also denote that these were typically accompanied by hidden bullish divergence as well. So that is a generally good sign. But again, we still have a lot of work to do, and I don't think that this is happening anytime soon. So hopefully that was helpful. And there you go for Bitcoin, sirs and zers.